What happens if the dollar loses its global currency status? What would change in the world if the US dollar slowly stopped being the global currency everyone relies on? The US dollar is used in global trade, banking, and reserves around the world. But what if that role started to weaken over time? In this video, we break down what could happen in simple terms, why it matters, and how it may affect everyday life globally. 1. Why the US dollar is so important. To understand what could happen, we first need to understand why the US dollar matters so much today. Right now, the dollar is used in global trade. Countries use it to buy oil, settle international deals, and store reserves in central banks. This makes the dollar more than just a currency for one country. It becomes a global standard. For example, when two countries trade goods, they often use dollars instead of their own currencies. This reduces risk and simplifies transactions. Because of this role, the United States has certain advantages like lower borrowing costs and strong global demand for its currency. But this system is not fixed forever. It depends on trust, stability, and global economic patterns. And like all systems, it can slowly change over time. To understand what happens if that changes, we need to look step by step. 2. What losing global status actually means. First, let's clarify something important. Losing global currency status does not mean the dollar disappears. It does not mean people stop using it completely. Instead, it means the dollar may become less dominant in global trade and finance. Right now, many global transactions rely heavily on dollars. If that share slowly decreases, other currencies may take a larger role in international trade. This shift would likely happen gradually, not suddenly. Think of it like a leading language in global business. If more people start using other languages alongside it, the original language is still important, but less dominant. So the idea is not collapse, it is transition. And transitions in global systems usually take years or even decades. Understanding this helps avoid extreme thinking and focus on realistic changes. Now let's look at what could cause such a shift. 3. Why countries might reduce reliance on the dollar. There are several reasons countries may reduce dependence on the US dollar. One reason is diversification. Just like investors spread money across different assets, countries may spread reserves across different currencies. This reduces risk if one currency becomes too strong or unstable. Another reason is trade relationships. Countries that trade heavily with each other may choose to use their own currencies instead of converting everything into dollars first. Technology also plays a role. Modern payment systems and financial networks make it easier to settle transactions in multiple currencies. Over time, these small changes can reduce dollar usage in some areas. But again, this is not a sudden shift. It is a slow adjustment driven by practical decisions. Not necessarily a rejection of the dollar, but an expansion of options. And that is an important distinction. 4. The role of trust in global currency systems. At the center of any global currency is trust. Countries and institutions use a currency because they believe it will hold value and remain stable. The US dollar has had that trust for decades due to the size of the US economy, its financial markets, and its global influence. But trust is not permanent. It depends on long-term stability and economic strength. Even small changes in perception can influence how much a currency is used internationally. However, changing a global currency system is not simple. It requires coordination, infrastructure, and confidence in alternatives. This is why shifts tend to be slow. Even if countries explore other options, the dollar remains deeply embedded in global systems. Think of it like a highway system. Even if new roads are built, the main highway is still used heavily for a long time. 5. What could happen to global trade? If the dollar becomes less dominant, global trade could start to look different over time. Instead of one main currency, multiple currencies may play larger roles. This could make international transactions more complex at first. Businesses might need to manage exchange rates more carefully. Countries may rely more on regional financial systems. For example, trade between certain regions could increasingly use local currencies instead of converting through dollars. This could reduce some costs in the long term, but increase complexity in the short term. Prices of goods traded internationally might also become more sensitive to currency fluctuations. This means import and export prices could vary more depending on exchange rates. However, global trade would still continue. It would not stop. It would adjust. And like all adjustments, it would create both challenges and new opportunities. Let's pause for a moment. Have you ever noticed how currency exchange rates already affect travel or online purchases? Now imagine that effect becoming more widespread in global trade. That is the kind of shift we are talking about. 6. What it could mean for the U.S. economy. For the United States, changes in the dollar's global role could have several effects. One possible impact is borrowing costs. Right now, global demand for dollars helps keep borrowing relatively cheaper for the U.S. government and businesses. If global demand decreased over time, borrowing costs could gradually change. Another impact could be on financial markets. The U.S. has deep and liquid financial systems which attract global investors. If that role shifts, investment patterns could diversify across other regions. However, this does not mean immediate weakness. The U.S. economy is large, diverse, and deeply integrated into global systems, so changes would likely be gradual and complex. Some sectors might adjust more quickly than others. At the same time, new economic relationships could form. This is not a simple win or lose situation. It is a rebalancing of global financial influence over time. Understanding this helps reduce fear-based thinking and focus on realistic outcomes. 7. How everyday people could feel the impact. Now let's bring it closer to everyday life. Most people don't directly interact with global currency systems, but they still feel the effects indirectly. Exchange rates can influence travel costs, imported goods, and international prices. If the global currency system becomes more diverse, these effects may become more noticeable. Imported products could change in price more often, and travel expenses might shift more frequently. Online shopping from other countries could also feel different. But these changes would likely be gradual, not sudden. It would feel like small shifts over time, while local economic factors would still matter more in daily life overall. Conclusion. So what happens if the US dollar loses its global currency status? The most realistic answer is not collapse, but change. A gradual shift toward a more diversified global currency system could happen over time. This would affect trade, finance, and international relationships in different ways. But it would not erase the dollar's importance. It would likely reduce its dominance, not eliminate its role. And like all major global changes, it would take time. Years, possibly decades. What matters most is understanding the direction of change, not reacting to extreme predictions. Let's pause one last time. Do you think the world is moving toward a single global currency or multiple strong currencies working together? Let me know your thoughts in the comments. I read them. If you found this explanation helpful, you might also enjoy our next video on how global debt quietly shapes the economy. If you like simple, calm breakdowns like this, don't forget to like the video, subscribe to the channel, and stay tuned for more clear explanations of global financial topics. Thanks for watching, and I'll see you in the next one.
In 2003, professional boxer and heavyweight champion Mike Tyson filed for bankruptcy with $30 million in debt, despite accumulating over $300 million during the course of his career, which poses a great question about money itself. Because a great deal of our actions or our motivations in life have an underlying desire or need to acquire it. But what's the point in acquiring it if the great issue seems to be with our ability to manage it?
Americans now have the highest credit card debt in history. Translation: you didn't learn anything!
Debt is an invisible burden being carried by the country's most vulnerable.
course, these statistics are reflective of the UK and the US, but consider for a moment your own attitude towards money and how money exists in your own life. What is money to you? Does it seem to enter your life and immediately leave once you have it? Has it ever placed you in a vulnerable position? A vulnerability that drew you closer to a get-rich-quick scheme or a guru telling you that you can get rich if you just bought their course?